This is like literally the thing. Why can't human beings do what they know they're supposed to do? You end up realizing I can feel the fear, or I can feel the desire, or I can feel even the rage, and then choose what I want to do. All I can say is that over time, I can guarantee you, if you're willing to have the courage to know what you really feel, you'll be able to do more and get more of what you want. And then that gives you more ability to say, but which choice is more likely to get me the thing that I want? Try to categorize it. Like, is that expectation about the market, or is it really about what's going to happen to me?
In today's episode, we are talking to Denise Shull. She's a performance coach to Wall Street traders, hedge fund managers, and pro athletes. And she's also the author of Market Mind Games. Denise has spent decades helping top performers navigate the mental side of risk, pressure, and decision making. She breaks down why trying to control your emotions might actually be the wrong approach, and why learning to understand them might be the missing link to confidence and clarity, not only in trading. In the podcast, we get into how beliefs, expectations, and even physical sensations shape your trades, often without you realizing it. Denise also shares a lot of practical tips that you can implement into your trading right away. So if you've ever second-guessed a setup, hesitated at the worst moment, or felt stuck in a slump, this episode is going to be for you. And now let's get into it. So welcome, Denise, and thank you so much for taking the time to talk to us. It's a huge honor, and I really look forward to ask you a lot of questions that I've prepared for today.
Thanks for inviting me. Happy to be here.
So I want to get right into it, if that's fine. I know you talk always a lot about research and studies. What is the most fascinating research finding when it comes to performance analysis, emotional decision making, that you have come across that is also valid for traders?
Oh, gosh. Well, I guess you would say it's the field of what's called anticipatory affect, meaning we are anticipating an affective state, and affect just basically means feelings and emotions. And so I think the best research, and there's a fair amount of it, is out of Stanford, saying that's the fundamental mechanism of perception. Like, even right now, we're not aware of it. It's subconscious or even unconscious. But as you're listening to me, and then as people are listening to this podcast, they are predicting what I'm going to say, like, half a second before I actually say it, based on their knowledge of the language, their knowledge of the subject, and what they think it will mean to them. So if I say all decisions are based on the prediction of a feeling, that is going to scare some people. And they're going to feel threatened by that. And then they'll be a little bit like defensive or critical. But I think that, it's both a concept and a reality at this point. There's a neuroscientist at Stanford. Well, he's really a neuroeconomist, which just means the brain, like, on risk, who has shown how this expectation of a future feeling, because that's really anticipatory affect means expectation of a future feeling. And broadly speaking, like, is it good or bad for me? Am I safe or unsafe? He's shown how that occurs at every level of the brain, from the brainstem all the way up through the prefrontal cortex and the frontal cortex. Just last week, I meant to pull it up, I didn't, but there was a quote from another researcher saying, sort of the state of the art. The state of the art is now we understand that the very first thing that happens is the prediction of a feeling. It's what it means to me, like whatever's happening, what it means to me. And then we layer cognition, or what we think of as thinking and analysis, on top of that expectation. Once you get that, it really changes it changes your self-understanding, what you're capable of, how you deal with your feelings and emotions and your thoughts, and how you better integrate them. I probably heard me say this, but to me, it's like, if you thought the earth was flat, because when you stand at the ocean, it looks like it's flat, and then you learned it was round, like, and then it's like, wow, now I can sail all the way around it. I think it's the same for human beings. It's like once we learn that this expectation of a future feeling is going on, we can deal with ourselves and whatever then we're dealing with in a completely different and more effective way. So that was a long-winded answer, but that's it.
That's great. So expectation management is probably then really important for traders. Is it that traders expect because when we look at traders, a lot of traders expect to make a lot of money. So this expectation management can also drive a lot of bad and destructive trading behavior, over leveraging, getting into trades too early. How do traders then manage those expectations more constructive?
Well, I honestly think step one is acquiring the skill of knowing what you're really expecting. Because inevitably, if you ask someone, like, let's say they'll say they're expecting to make money or lose money, but then you say, well, okay, so you make money, then what? Well, then I'll feel like proud of myself, or then I'll look smart, or then I'll feel comfortable that I can be a trader. There's always a second level, and honest to goodness, usually a third, fourth, and like fifth level as to what those things mean. So to me, there's a whole skill of just self-awareness of actually knowing what you really are predicting. Like on the converse, people will say, oh, they got into it too quickly because they were afraid of missing out. They say, well, what would have happened if you missed out? Well, I wouldn't have made the money, but, also I would have felt stupid. I would have been mad at myself, and if I was mad at myself, then I'd be in a bad mood, and then like I'd be mean to my kids. Like there's always these things that are lurking. And it's actually those things, second, third, fourth, fifth level, that are driving what people do, but they don't know it. So if you endeavor to know what you're really expecting and then try to categorize it, like, is that expectation about the market, or is it really about what's going to happen to me? And usually it's about what's going to happen to me. I mean, the brain is programmed to keep us safe. Like the brain is doing this to say, that's dangerous, that's not dangerous, this is good for you, this is bad for you. So you're not going to turn that off. You're not going to turn it off. But you can learn to be aware that you're having that expectation that's about you and go, okay, well, that could happen. But as you're aware of that and you make it conscious, and sometimes I'll say, like, you hold it in one hand, you're able to say, but my feelings about what the market is going to do are this, this, and this. And you're basically able to avoid acting on the fear for yourself, or at least reduce the chance that you act out the fear for yourself and raise the chance that you act on intuition about what the market's going to do, your pattern recognition. I don't know if either one of you golf. I grew up with a very good golfer. I didn't golf, I do golf now. I liken it to like learning to play golf well. Like, I saw one of you shake your head no that you don't, but you still understand, like, the way you swing that club, it's really subtle differences where the club hits the ball, what happens. Well, this is like that. There are very subtle differences when you're feeling, you're having feelings about what something's going to mean. You can, just like you can learn to make that club face hit the ball, or, tennis racket, or pickleball, or, whatever, or even soccer, how your foot's hitting the ball. You can learn the nuances, but chances are you need to like make it a strategy. You have to work at it. So you use the term expectation management. I think of it as behavior management. Like the more you know what you're feeling and which category it falls in, the better chance you have of choosing the behavior, taking the action, pushing the button that gets you what you want. But a clue is not to judge any of that. Like it's all just a data set. And your psyche's giving you data. And you're trying to learn to like kind of which feeling is what, if you will. Does that help?
Yeah. And I think this is really where traders struggle a lot. So in Edgewonk, traders can send us their journal and they maybe need some help on interpreting the data and making sense of the data. And a lot of traders try to tag specific emotions and feelings to trades. But what I found, it's traders struggle to really find that emotion that is that belongs to a specific situation. And I wanted to ask you, how can traders get better at identifying that emotion or that feeling that went on, that goes on, or that was present in the moment?
I mean, I'm not talking my book here, but I am saying the obvious is to get help from someone who can help, talk through this happened, then that happened. The second is what you're talking about, writing that down. I mean, I think I might have been the first person who talked about tagging emotions using OneNote, like back 20 plus years ago. And in OneNote, you can make little, your own little icons so you can, and then look at it at the end of the week, because we will have patterns. Like, a perfectionist type person may basically set their stops too tight and try to be perfect in terms of taking their stops, when in reality they need to like relax a little bit and more surf the market and not be so rigid. A person who's like heavy in the desire to make their trading career work may take things too soon, take things too early, which is the same, but take too many trades. So we do all have patterns. And I will say this is jumping way ahead, but those patterns will reflect back to our self-image, like how we think we fit in the world in the right way to navigate the world, but we can come back to that. Yeah. And the third, I guess, is really to kind of know what the categories are. So, like, this is one I talk about all the time in public, but, everybody talks about fear of missing out, right? Whether it's not getting in the trade, whether it's getting out too early when it's not working, whether it's whatever, it's pervasive, right? If you ask someone, and everyone can use this, like, well, what does missing out really mean? They will almost inevitably, and really inevitably, say some version of regret. Like, I wish I would have. And the fact that I didn't means fill in the blank. So it's virtually never like the missing out on the money. It's what flavor of regret missing out on the money induces. So everyone can use that because it is pervasive, that missing out is really regret. And then it's like, what's your form of regret? Like, one I hear a lot with my clients is, if I planned a trade and didn't take it for whatever reason, even if I turned out to be wrong, I'm going to be so mad at myself that I did the work, had the trade. Like a couple of years ago, I had a client, I'm just going to say, he worked at Citadel, and he'd had a bad quarter and lost a bunch of money. And came December, I don't remember what year this was, 22 or 23, he had a view on the market, and he was down money for the year, kind of a lot. And he's like, but I'm sure that, like I've done the work, I feel strongly that this is how December is going to play out. I feel strongly that I should have these trades. And so we talked through, would you rather not lose more money, avoid being wrong, or not take the trades and turned out to have been right? Well, which one do you think he chose? He chose taking the... Go on.
He wanted to be right, probably.
Yeah, he didn't want to, he would rather take the trades and turn out to be wrong for whatever reason, right? Because he understood, every day the world can change, right? So whatever he predicted for the end of whichever year that was, like it could turn out to be wrong, right? Something could happen, it could turn out to be wrong. He'd rather add to his loss and end his year worse than not take the trade and turned out to be right. And it wasn't about he wasn't going to make all the money back and then be profitable. Like that was not going to happen. I mean, he was going to make some of it back, right? If he turned out to be right, but he still would have had a fairly negative year. I have gone through that scenario with scores of professional portfolio managers at hedge funds. But it's hard to do that until you say, what am I anticipating? What am I expecting might happen? And then, as a very famous trader said to me a couple of weeks ago, then pick your poison. Like, am I willing to lose more, or would I rather risk losing some and possibly be right and not have to feel the regret of not doing the trade I thought would work? So that's it. Like, I think most traders experience that in some way, shape, or form. And so most people ought to be able to relate to, is fear of missing out really fear of future regret? And then what kind of regret, like for you? And that's going to be personal to your circumstances and your P&L, et cetera. It's going to look and sound the same, but it's like a fingerprint where it'll be ever so slightly different for you. But what happens is, like, play that out. Like, let's say you take the trade. I think in his case, he took it. It turned out to be basically right, maybe not as much right as he thought. But like, he was satisfied with the fact that he did his job, that he did the work, came up with a series of trades for that month. By the way, these people trade all different time frames. And a lot of them say they trade very long term and trade overnight or for 2 or 3 days, and sometimes even intraday. They will talk about being fundamental long-term traders, but not necessarily. So I think there are like a handful of things like that are common scenarios. So people can learn those common scenarios and then try to see where they fit in. I would prefer they not say, oh, that's exactly me. Oh, I'm going to do exactly that. Like, I would prefer they like listen to themselves and track how they're really feeling. Now, it's important that people be willing to know how they're really feeling. And that is not always the case. I mean, we've been taught you should set the feelings aside. Depending on, how you were raised, that is more or less, important. Truthfully, as mostly men, you've been taught, oh, like, don't have your feelings, right? Be stoic, all that. Like, so it's normal. Like, people will be afraid of knowing what they really feel. All I can say is that over time, I can guarantee you, if you're willing to have the courage to know what you really feel, you'll be able to do more and get more of what you want. I get that people have a lot of reasons for being afraid of knowing, but try it. Like, try it on a Saturday when you're running an errand and there's traffic and you're frustrated, and like, just saying, man, I hate this. Like, I hate being stuck in traffic. I hate, like, I wish my wife or my girlfriend hadn't sent me to the store, like, whatever, like, just, and go. You'll find that you can just feel something, and it's uncomfortable. Like, it's unpleasant. You're annoyed or frustrated or afraid or whatever. It's unpleasant, but it doesn't kill you. It doesn't even really hurt you. It just feels unpleasant for a little bit. But in that feel, if you have the strength to take on the feeling unpleasant, you can get all kinds of useful information.
So how do you dig deeper? How do you know what you're actually feeling? Because I think, as you said, we have been conditioned to not even acknowledge our feelings. So sometimes you don't even know if it's anger or sadness, or especially in the moment when you're in a losing trade.
You got to tell yourself, I want to know what this is. Like, if you, and that's using your intellect, right? Like, that's using your intellect to say, because these things are in your body. What is my body saying? Now, what I will tell people to do is make a list of every feeling they think happens during trading, and then try to find it. Like, try to find the word that fits what your visceral physical experience is. This is actually called, by the way, in research, emotion differentiation and emotion granularity. So differentiation is, and like, the category of fear, which could be anywhere between panic to worry, right? The category of frustration, which could be anywhere from like enraged, I want to kill someone, to, ever so slightly annoyed. The category of disappointment. So I'm giving people cheat sheet, right? In the category of disappointment, God, I'm kind of upset. I wish I wouldn't have done that, to like, oh my gosh, I'm so disappointed that I'm depressed. So those are broad categories. You can say, which category do I think it fits in? And then you can say, what degree? Like, how frustrated am I? How afraid am I? Part of my coaching with my clients is to teach them the skill, like to work with them so they are better at finding the word that describes their state. Because there's actual research with portfolio managers that shows the better you are at emotional differentiation, the more money you make. There's also research with traders that show the more they know what's going on in their body, which is called interoception. Like the more they could say what their heart rate was, or like, is your mouth dry, or your palms sweaty, the more they could be aware of that, the more money they made and the longer they lasted on the trading floors in London. Now that's the same thing. Like feelings and emotions occur basically below our neck, right? Somewhere in our body. So if you're better at knowing like is your heart rate elevated, is your breathing shallow, chances are you're also better at knowing what we would put in the category of a feeling or emotion. So there's the thing people can do. Just sit back and go, like when I give a workshop, I'll start this out and go like, okay, like right now, if I do this, my feet are a little bit cold. My stomach's a little bit, probably needs food. Just can you recognize sensations from your body? So be willing, practice, start like with that simple level. Like, am I feeling a physical thing? Like if I think about it now, I feel ever so slightly nauseated, and not like I'm going to throw up in the middle of the podcast, but I probably just had too much coffee and not enough food this morning. And then either make yourself a list, or there are plenty of lists of emotion words out there. I don't think I have a list in my book. I might have built this e-learning course that's on our website. There might be a list in there, but that course definitely leads people to make their own lists. And in the end, what matters is if I say I'm annoyed, like, does it click? Does it resonate? Do I get a sense of satisfaction that like I've identified what's going on with me? And this is what I find. Even though people are conditioned to be afraid of this, it generally ends up being easier than people think, for the most part, unless someone was really traumatized. So like I have a client whose father died suddenly when he was 8 years old. I don't know how old he is now, 50-ish, portfolio manager, but he's risk averse. He had a fairly tragic thing happen to him fairly young. And so it's harder for him because I think as you start to go down these roads, you end up with all of your past experience. We can get into that. But when I'm coaching people, I'm actually asking questions, and they'll think that they were afraid when they were really mad. Like, here's a good example in a professional environment where these portfolio managers have, bosses who run their trading group. They'll think that they're afraid of whatever, putting on a trade, taking off a trade, adding to a trade, whatever. And as we talk through it, they're actually really annoyed at their boss who, for example, told them they were trading too many short-term options. So they'll feel like they're afraid to put a trade on. In reality, they end up feeling conflict about, should I just put it on straight out directionally, or should I put it on in options? I think I should put it on in options. But last week, my boss told me I was trading too many short-term options. Well, and you go through that, and they're really not afraid of the trade. They're mad at their boss for like putting the pressure on them to trade a different style. And they don't necessarily realize that. But, I started talking about this in 2003 or 4. And what generally people have said is that it ends up making things easier. And I think that's because it's accurate. Like, because it really is the way human perception and judgment work, if someone's willing to take it on, they find out it's not so bad. And like, you don't actually have to be afraid of knowing what you feel or feeling, because it ends up being not just knowing, it ends up like just feeling. Like, I have another client who's been over trading, like made boatloads of money a few years ago, has not been able to make money since, way over trading. Like, I was like, wait a minute, tell me about your tennis game and their double faulting and their serves. It's like, you want this so badly that you're trying too hard. Like, so I want you to just feel before you serve and before you put the next trade on, how badly you want this to work. Because basically we're at the level of desperation with this person. And so they're, flailing, both in they're a decent tennis player. He did say to me, I don't really know what you mean, feel what I want. I'm like, well, he's tricky. But I think he's afraid of feeling like what happens is he's like afraid if he acknowledges how badly he wants it, that you'll drown in it. It doesn't happen. It doesn't happen. Like, you end up realizing, I can feel the fear, or I can feel the desire, or I can feel even the rage, and then choose what I want to do. So again, that's a long-winded answer, but hopefully it helps somewhat in what to do.
That's fascinating.
In short, it's like, get familiar with the feeling. Get familiar with different words for different feelings.
Right.
Mm.
You talk about patterns and breaking out of those negative patterns. What I see a lot is that traders often, when I see it in their journals, you can look at the data, but you can also see what they write and what they think. And a lot of traders, when they're in a bad spot, you see that they know what they should be doing, but they keep doing exactly the opposite, trade after trade, week after week, and they seem to just can't stop engaging this negative behavior. Why do you think this is the case, and how can traders break out? I think it can be very individual, but is there some advice from you?
Well, what's happening is they're acting on a feeling that they're expecting to have, and they don't know that. And because that's the foundation of perception, judgment, behavior, like the cognitive awareness of what you should do is not strong enough to overcome the expectation of the future feeling. This is like literally the thing. Why can't human beings do what they know they're supposed to do? Right? It's everywhere, but it's certainly, trading is, by the way, the hardest mental game there is, and it's going to, tweak or provoke all these things to their maximum because it's such an uncertain environment and anything can happen and the game never ends and blah, blah, blah. But I guarantee they are acting out an expectation of a future feeling. And that's just, they don't know they have that. They don't know that's driving them. And it's just, it's like a big, tall, strong person versus a short, little, weak person. Like the big, tall, strong person is the expectation of a future feeling, and it's going to win. But if you start to know what it is, get it out on the table, you're much able, then it's more like of a martial arts karate situation where you can use your knowledge to overcome the person that's bigger and stronger than you. But if you don't know it, and then I will say, those expectation of future feelings have layers. They do have layers. And like the first is, I'm going to be mad at myself that I missed the trade, for example, or I'm going to feel stupid. A typical one next is then I will not be able to trade for a living. And then, oh, damn, I'm going to have to go get like, a real job. And believe me, actually, portfolio managers in hedge funds will say these things to me. Like, well, I won't be able to keep my book and another hedge fund won't hire me and I'll have to go get a real job. Like, even though they have an actual real job for a hedge fund, but they look at it the same way. And then what would that mean? And then my wife will be disappointed. Usually it's the wife. There always is underneath that, like who we are and how much success we can expect for ourselves. Like the guy that got me into trading in 1994. I mean, he started trying to get me to buy a seat at the board of trade in 1992, but he was a brilliant trader, but had a tendency to like self-destruct and lose an enormous amount of money in any shockingly short period of time. And, when you dug into that, ultimately, he was like digging in, saying he was right to his very controlling, very critical father. So you have this kind of common level of unconscious feelings of how is regret playing out for me. Then you start to get into more personal scenarios that relate to like how you grew up. Like a typical one that I see, that I even mentioned to a very famous head of a hedge fund who you would know, is like youngest children really have that tendency to dig their heels in and try to prove they're right, like in a losing trade, and get stubborn. But if you think about like I had a client who was the youngest of 4, and he always did this, because if you're the youngest child and you have like, let's say 3 older brothers and sisters, for a long time, they know more than you. They're stronger than you. They're smarter than you. They push you around. They beat you up. Like, yeah, they may treat you as the baby of the family, but they also like, take advantage of you, right? And so you have this whole 20, 30 years of experience where they are always know more. And you want to say, excuse me, but damn it, I'm just as smart as you are. And so like that will play out in trading. So there's the general level that all of us traders have, and then then there becomes a deeper personal level. They're acting out an expectation of a future feeling, or the attempt to avoid, like, I don't want to feel that regret that I'm subconsciously predicting. So therefore I need to take the trade, not take the trade, add to the trade, whatever it is. You're trying to avoid that regret.
I always wonder, because I have heard you say this before, why and how does bringing this to the surface is going to fix or help mitigate those issues that then manifest in the trading?
The first answer is I don't know exactly why it works. I don't think anyone knows exactly why it works. There's a scientist, Lisa Feldman Barrett, who wrote a book, How Emotions Are Made, and she has a book after How Emotions Are Made that's a little easier to read, and I can't think of the title right now. But she's done some research showing that neurons and synapses, the basic biology of our brain, but the neurons and synapses for feelings are run throughout our body. So that would mean that, well, which would make why we feel things like in our gut or our heart or our back or whatever. But if you realize that, like, the human brain is trying to keep the human being safe based on everything that brain has learned, that's its only job. Well, it's going to prioritize that over everything else. It's going to deliver that information to you through a feeling, through a bodily experience. It's trying to help you, like your psyche is trying to help you. But you, because you've been talked to, have said, shut up, I'm not listening to you, go away, what's my analysis? Well, your innate human need to survive and stay alive is stronger than your analysis. What you think will keep you safe may be skewed, right? It may be completely skewed, but it doesn't matter. Your brain thinks that's what, you'll hear people who stay in very bad emotional situations, abusive situations. Why? They know, but the brain goes, well, I've been experiencing this and I survived this. So this is familiar and I know how to survive this. And the unfamiliar is scary. So that's the number one reason that people don't leave an abusive partner, because the familiarity, if you're still alive, the familiarity is a form of safety. But in the end, I don't think anyone really knows why being able to articulate, know what you're feeling helps. I don't think we actually know, but we know that it does.
Do you think this, because in trading, the uncertainty factor is much, much higher than those close games, chess, tennis, poker? Do you think that this uncertainty brings out or makes all those things much harder for traders? And
it does. Yeah, go on.
Do traders then try to artificially create some sense of control and certainty in their trading where it's actually maybe damaging?
Yeah, absolutely. So, it is it's relentless uncertainty, unlike any other realm. Even if you're in the military and you're in war, at the end of the day, it's kill or be killed, right? There's a black and white, well, there's a black and white absolute, if the gun's pointing at you or they're coming after you, kill them. You don't have that in trading. Sports, the game ends, you win or lose, you deal with the win or loss, you start over. You don't have that. Even when you're out of the trade, the market's still working, so you're conscious of what it's doing. So it's never really. So that creates the highest level of uncertainty that the human brain has to deal with. And it's uncomfortable for a lot of people. Some people really like it, but they've trained themselves to like it, or they had reasons to learn to like it. But it's uncomfortable. Again, it's if you can just feel that it's uncomfortable, that not knowing is annoying, or makes you nervous. It's easier to navigate. But because it's uncomfortable, we try to do something to get rid of the feeling. That's generally the case. We try to do things to get rid of these feelings that are unpleasant. So taking a trade, whatever it is, initiating, adding, getting out of, whatever, for a moment makes you feel more certain. So for a moment, it's relief. Maybe it's good relief, maybe it's bad relief. Maybe it's for the right reasons, maybe it's for the wrong reasons, but we tend to want to take action because the action makes us feel better. Where the real skill is being able to tolerate the unpleasant feelings and then choose the action that most likely gets us the thing we want. And that right there is a huge competitive edge. The ability to feel uncomfortable, preferably know why. And then that gives you more ability to say, but which choice is more likely to get me the thing that I want? And you're much more able to do that when you can tolerate the discomfort and know why. Because otherwise you're just compelled to try to get rid of it by taking some action. Doing the thing you shouldn't do. But for a moment it feels better. So, and then you go, why did I do that again? Why did I do that again?
That's super interesting. I recognize myself in that. Especially at the beginning of my trading career, I always had a huge issue with letting trades run. And the pressure would just build up until a certain point you can't take it anymore and you just close the trade with whatever before your profit target. And then you feel good for 5 seconds and then you feel exactly like that. Why did I do that?
So you can
That's so
sit there and go,
interesting.
I hate this. I hate this uncertainty. I hate sitting here waiting. This is miserable. This makes me, I just want to put my fist to the screen. Whatever. You can sit there and say those words or type them.
Yes.
And all you've done is say words or type them. And if you type them, you can turn around and erase it. But the doing that would allow you to stay in the trade.
I've read some fascinating research about this uncertainty and dealing with probabilities. There's some research, for example, people prefer to choose numbers on a lottery ticket themselves instead of just generating them randomly. Although it doesn't make a difference in the end, they feel more in control. And there's been some really fascinating things. People feel more safe in a car versus in a plane because they are actually the one driving and they feel they have this wrong sense of being in control. Do you think it's helpful for people to also practice those things like feeling or being more comfortable in the uncertainty and being with discomfort outside of trading? Will that translate to?
Absolutely. I am a very big fan of practicing knowing feelings and dealing with feelings outside of trading. You're getting familiar with it. You're realizing, like, if you're really frustrated, I don't think that you all have Home Depot stores, but in the United States, we have these stores, Home Depot, that have everything that could relate to having a home or a garden, and oftentimes men have to go to Home Depot on Saturday to get whatever, and they're annoyed with it because they'd rather be golfing or whatever. But while they're in traffic at Home Depot or on the way to Home Depot, if they say, I absolutely hate this, and I am so mad at, Diane for sending me to the store again. Then they go, okay, well, okay, I'll go. She'll be happy. It'll be okay. And you just learn that you can have that feeling and nothing actually happens. And oh, by the way, if you have that feeling in that circumstance, you don't go home and that. It's easier to not be mad at your spouse for making you do that thing, because you've actually just worked through the feeling. You'd be of course you don't want to sit in traffic on a Saturday. It's not, when you think about most feelings, by the way, they make total sense. If you go, person describes how they feel in any situation. It's of course you want to make money. Of course you don't want to lose money. Of course you don't want to be wrong. You get these messages out there that really do amount to, oh, you shouldn't have this feeling. Oh, you're a trader, and you should know you're going to be wrong, and you trade the probabilities. Yeah, but that may be technically true, but nobody likes being wrong. Nobody likes losing money. None of those feelings, they all make sense. Again, that goes back to stop judging that. There is an emotional logic to everything someone feels if you understand that person, their circumstance, and their history. Absolutely. Even stuff that at first sounds crazy. When you really think about it, I do this to my clients a lot. They'll tell me, they feel this, that, or the other thing. And I'll be like, yeah, and what's irrational about that? If you think about it, that feeling makes complete sense. It doesn't mean it's a feeling you want to act on. But I was talking to a client yesterday about the intense desire, not the one I just mentioned, but a different one, about the intense desire to do really well this year. Well, it's actually the guy that left Citadel a couple of years ago. And now he's somewhere else. And I was like, if you didn't have that intense desire, you wouldn't do the work. It's the desire for the outcome causes us to do the work. You just don't want to be constantly acting out. You don't want to be constantly taking the feeling and doing the feeling. You want to be feeling the feeling and doing the thing that more likely gets you what you want. So it's control the actions, not control the emotion.
Right. So it's like growing up, not being childish and acting on your impulses, but maturing to recognize the emotion, maybe seeing that as a proxy for what is going on in your trading. I see a lot of traders do that in their journal. I've talked to a trader who had issues with recognizing the emotion, but then he said what he feels helps is looking at what went probably wrong in his trading. He's taking a trade that's outside of his rules or holding it overnight, and those things made him feel a certain way, and that way he was able to identify the issue and work around this maybe hard way to find the exact emotion.
I think I follow that. It
Yeah,
made
so
me think of one thing I see a lot of the time is people are generally like, it's the human condition for the most part to be, at least a little self-critical or a little, what's the word I'm looking for? Like feeling not good enough a little bit or a lot. Like all human beings feel that way. Like in some realm, in some way, it's the human condition. But trading is a good mechanism to make you feel not good enough, like, because it's so hard. So for example, I used to do this, like when I would keep that OneNote journal and I would look back over a trading week and realize the difference in my results for the week where, I'd maybe make, let's say, 75 decisions in a week, was 1 or 2 or 3. Like I could feel like, oh my gosh, I blew that week, I didn't make any money or made very little money or whatever. And you look back and you go, and so you're feeling like really bad about yourself, like I can't do this, I'm an idiot, all the stuff that people say to themselves, and everybody says it, or almost everybody says it. I mean, granted, there's a whole world of people that are not my clients, so maybe they don't say it, but and then you look at your actual history, and it was like a small subset of decisions that skewed your results. So you could say, okay, I made 75 decisions, 55 of them were damn good. 20 were, 15 were marginal and 5 were bad. Well, regardless of the P&L, if you only made 5 bad decisions out of 75, you actually did fairly well. So then it's like, what drove those 5 bad decisions? Why did I do that? And, then you try to cut the 5 to 2, right? And so I say that to say, like, it's not everybody, because there are some people who do the opposite, who think they did way better than they did. But it's much more common for people to think that they actually did worse than they did if they analyze the decisions they made with the information they had.
yeah, it's totally also what we see in the journals that users send to us. It's like they can hold it together very well for a long period, and then they screw up a few times, and then they send in the journal and said, I don't know what to do with this. I think I'm a failure. I cannot make this work. And you look at the data, you can parse the data, trades where you followed the rules, trade where you trade outside of the rules. And it's just a handful of trades that mess up everything, and they often don't see the reality
Right.
of it. It's fascinating.
Right.
Which brings me to a point. I want to ask you about post-session routine. Do you have any tips on how traders can improve their post-session routine? Maybe ask themselves a question or what to do to, just improve that part of their trading?
I would say, first of all, I think it's somewhat individual in terms of like energy levels. Does it make sense for you to do it right when your market's closed? Does it make sense for you to do it the next morning? Like people do have different energy levels and rhythms and, family responsibilities or whatever. So first of all, like figure out a routine to do it that makes sense for you. And then make your overall objective to be accurate. You want the best understanding of what happened that you can get, not the skewed understanding, which is like saying I'm an idiot or I'm a failure or whatever. Chances are that's skewed understanding. And it's like part of the human condition of feeling bad about yourself, but part of like whatever your past is. And maybe you had a father who was, you have to get an A or whatever. Like strive for accuracy. I tell my clients this all the time. We're just trying to be accurate. Like if you can't be accurate about an understanding of a situation, what are your chances of fixing it? Like your solution's going to be wrong if your understanding of the problem is not the truth. So on your schedule, in your way, with the objective of accuracy, knowing that chances are you're likely to be self-critical and inevitably you're acting out of expectation of a future state. So you're trying to figure out what that is. Like, what's the consistent thing you're doing? Not, I mean, for the most part, people are smart enough. And there's research that shows like a human being can understand price action, even if they don't have a ton of training, because it is a reflection of other humans' behaviors. So like it's been shown that, you know, college kids in research experiments can get good at predicting price. They don't know a single thing, but it's because it's the reflection of a crowd. And we all have the ability to do that as human beings. So remember that. Another thing I will say, you know, is people ought to be able to describe what the market is and how they interact with it on a Saturday afternoon outside of trading. That's actually shockingly hard to do. But markets make sense to people in different ways. Like some people can trade the back and forth and it makes sense to them that it's back and forth and range bound and, you know, fade the high and buy the low. And other people, it makes sense to them in a more momentum way, you know, or some people like are more comfortable being directional, taking a bet, being directional. Some people are more comfortable being hedged. And that's a result of like background education training. But know what yours is. Know, like, if you didn't have instructors and mentors, like how would whatever markets you're trading, like how do you think they operate? What moves them? What kind of music do they reflect? You know, are they like jerky rap music or like smooth classical music? Like, try to be able to recognize that however you see those markets is fine. Like, there's no right way to do it and wrong way to do it. There's the way that the price action makes sense to you. And this is why, by the way, taking someone else's trades doesn't work very well. Because you don't have like the sense that it's correct, or without the sense it's correct, you're not able to stick with it. You know, when you need to, you overreact, get in too early, out too early, etc. Again, it's like you don't have the feelings you need to be able to execute the trade because they're not your feelings of confidence, they're someone else's. I don't know if that answered the question or not.
Yeah, I think it does.
So yeah, so in layman's terms, basically the trading system that you choose has to fit your personality like a glove, is what you're saying. Otherwise, it will
Not like
never
a
work.
glove, but I don't know if it has to be, but it just has to make sense to you.
Yeah.
Like,
It has to click. Yeah.
yeah, I mean, when I started, and if you've listened to me, probably, but I was in this upstairs trading office at the options exchange in Chicago. And basically, guys from the floor were coming upstairs, and it turns out they all had different styles. Like one of them was doing merger arbitrage, you know, which made no sense to me because I was like, really, that sounds too easy. But, you know, another guy was trading utilities back and forth for at that time an eighth in stocks. You know, another guy was trading momentum, like the drug stocks have moved together, the oil stocks have moved together. And so I was like, what's the right way to do this? And the firm owner was a buy the dip kind of guy. And he tried to get me to be a buy the dip kind of girl. I'd much rather buy something when it's going up. So I left and went to Schoenfeld, where everyone was trading intraday momentum. And so now, 30 years later or whatever, that still makes sense to me. And I've told this story in another podcast I won't go through. But my husband learned then to trade options, and he's a former economist and econometrician, and he likes like double diagonals, and, you know, we'll make money if it goes this way, but we really won't lose any money if it doesn't go there. And I'm like, buy the damn puts. I think it's going down. If I'm wrong, I'm fine. Like, I don't want to be hedged. And that's how it makes sense to me. And that does not make sense to him at all. The other day, he says to me, well, I think maybe you just don't really understand how these trades work. Now you can imagine, as his wife, how I took that. I said, I think maybe you just don't understand momentum trading. He was like, oh. I'm like, yeah. Oh, I used to sit next to Dimitri Baliossi, who has a hedge fund now that I don't know. He's got 10 or $20 billion to trade. I think he knows something about it. And I learned to trade sitting next to him. So I might know something you don't. Either one can work. It's just easier for one to navigate this unconscious, subconscious emotion that you're trying to make conscious if the strategy you're using to interact with the game makes sense to you.
I'm really interested in how you would approach your worst client possible. Let's imagine a retail trader who has been trying to do this for multiple years, tried a lot of strategies. He's doing all the mistakes, system hopping, etc. Completely desperate, frustrated, hates himself. All the good stuff.
I definitely go for, in that case, you definitely have to go for, like, have this person come to think about themselves in the world growing up.
Mm.
This isn't exactly that, and I told this story before, but I once had a client, retail, meaning he traded his own money. Now, he traded his own money from an apartment on Park Avenue in New York City, so he had a lot of his own money. And had grown up in said apartment on Park Avenue in New York City, so grew up well off. But his parents, he was an only child, and his parents stopped speaking to each other when he was like 6 or 7 years old, and lived in that apartment with, like, you know, a maid and a cook and the child, and didn't speak to each other for like a decade. And his problem was like putting on trades. Like, he had all this money to trade, and he could sort of put a trade on, but not really, like, and he would spend days not putting a trade on. And I'm like, okay, let's, in that case, go back to his experience as a child. I mean, it's so extreme, right? Like Lisa, they would sit at the dinner table for years on end and never speak. The servants would speak. And he could speak to his dad or he could speak to his mom, but they would never speak to each other. So if you're the kid in that, you're going to be like, should I talk to dad? Should I talk to mom? What should I say? You know, like, you're going to constantly be, you know, just like this, right? Like nonstop. So should I be long? Should I be short? Should I be long? Should I be short? Should I buy? Should I, you know? Once we connected that experience with how he started trading, he's like, this is completely unbelievable. So if it's extreme, it's some sort of replication of something that happened growing up. And that's a matter of figuring it out, what it is.
All right.
Denise, I want to be mindful of your time. This was really fascinating. I will link everything about your website, courses, your book in the video podcast description below. People can find out more. There's tons of amazing podcasts that you gave on YouTube as well. I binged watched, I think, maybe 10 or 15 hours over the last two weeks. It was really a fun rabbit hole to go down. So again, thank you so much for spending your time here with us today. It was a real pleasure.
Oh, thank you for having me. Really good questions. And I really appreciate you, you know, letting me ramble on trying to explain my answers.
Well, thank you so much, Denise.
Great.
Okay.
Thank you.
All right. Take care.